Today we're talking about NFTs. We've got Michael Lewellen here with me again, board member of the Texas Blockchain Council, and also with Open Zeppelin, where he does smart contract code audits. We've talked about DeFi, we've talked about a number of different topics. Today we're talking about NFTs. So tell everybody what NFT stands for, what kind of tokens, Ethereum tokens that NFTs are built on, and what kind of use cases do we see NFTs being used for?
All right. So NFT, first of all, that stands for non-fungible token. And then the next question you might ask is, what does fungible mean and why is it not fungible? So fungible just means that it's similar to one another. So the dollar is fungible because every dollar is the same as another dollar. There's no difference.
You can trade one for the other with no friction.
Exactly. And the original tokens that people were building on Ethereum were all fungible. They were just basic tokens, just like a cryptocurrency or a Bitcoin. But then people wanted to say, well, what if I want to represent something unique? Like there's only this kind of coffee cup in the world, or there's only that particular brand of watch, or maybe there's only 100 of them, but each of them are somehow unique. How do we capture that? And that's what a non-fungible token does. It says, let's create something that we want to be able to transfer back and forth like a cryptocurrency, like Bitcoin, but we want it to be unique and potentially even tied to a real world asset out there, like real estate or a trading card, or really anything that you could potentially link to a digital asset.
Okay. And we hear a ton about NFTs in the news, and there's sort of this progression of innovation that's happened in the blockchain space and the crypto space for the last couple of years. Where are we in the hype cycle around NFTs? What do you think?
I think we're definitely in a very strong hype cycle where people are really excited about it. They're trying out new use cases, and we're seeing a lot of celebrities now promoting their own NFTs. I know a big one was Mila Kunis created a TV show and minted a bunch of stoner cats as a part of it. So examples like that are becoming more and more common. And I think we're also seeing a lot of prices going up. So there's a limited supply of this token or this NFT. So buy it now while it lasts. Very similar to, like, you might say Beanie Babies or Pokemon cards or anything that people suddenly want. It doesn't do any value. It doesn't do anything that like creates money or adds to your net worth, but you like it, it's cool, just like sports memorabilia. Yeah. And so I think while we're definitely seeing a lot of NFTs that might taper off over time, I think there's definitely going to be a lasting impact for NFTs that do hold that value, where people aren't just buying it to get rich, they actually do enjoy whatever it represents.
You said that very diplomatically. I'll say it a little less diplomatically. I think there's a bubble in NFTs. So I think there's going to be a pop in that bubble and people are going to lose a lot of money. But in the long term, there's going to be, in my opinion, certain assets that have absolute scarcity that increase in value. And that, there's going to be, just like a lot of things, 99% of the NFTs that were ever minted are probably never going to be worth much. And they're going to decrease in value over time as people forget about them or are less excited about them, like Beanie Babies. That was a great analogy. But then there's that 1% of NFTs that may represent, like a digital Kobe Bryant rookie card. Yes. And maybe there's 3 of those that exist. Or maybe it's an NFT, a tokenized physical card that's tokenized using an NFT, or a digital, like on Top Shots or something. Mm-hmm. So talk a little bit about some of the more use cases that are a little bit more like in the collectibles space, and then in a second we'll talk a lot more practical real estate type things. So what about like Top Shot, collectibles, music? Where do you see that space going, and why have those industries really embraced NFTs?
So let me actually start from the beginning with like one of the first NFTs that got a lot of traction, which was CryptoPunks. And yeah. CryptoPunks is very simple. It's basically just a pixelated image. And they were all like 10,000 of them procedurally generated. Some of them have cigars, some of them have hats. And what we've seen is that because they're kind of the first NFT, they've gotten a lot of value just by the fact that you can say you owned one of the first NFTs. And people will even use that photo on their Twitter profile as kind of a way to show off, like just, the fancy hat that's
It's a status symbol.
Exactly.
It's like wearing Prada or driving a Mercedes.
Yeah, and it's a big show of status in the Ethereum community because they're now worth hundreds of thousands of dollars in some cases. But ever since then, and we've seen a lot of versions of CryptoPunks come out since, We've now seen a lot of more established companies, such as Top Shot, where the sports, basically sports groups that are already very familiar with how memorabilia can be valuable, are realizing that there's now a new area in this digital space. So taking the same things that were considered valuable, like a jersey with a player's number on it, especially a very prominent player, and actually being able to digitize that and put it out there in the space for people to buy. So now we're seeing, if for an Ethereum person, a CryptoPunk might be a status symbol, but for a sports person, then having a jersey or maybe a digital version of a famous player is something that they would care about and want to share with friends.
And it's funny when I explain this to people, it doesn't matter that the vast majority of the world sees no value in that and would pay nothing for it, but there is a subset of fans that put a lot of value on that and would pay a lot of money for it. Yep. So how do these marketplaces work, buying and selling NFTs? What are you seeing there?
So that's one of the nice things about NFTs is the fact that it really does, in most cases, open up a whole marketplace for people. Because not only can I buy an NFT from anywhere in the world, typically it's actually managed by a smart contract. I go to the smart contract and I say, let's say that they're minting the NFTs. This is part of the initial sale. I can just say, hey, whatever the rate is, I'll give you that much in a cryptocurrency or a stable coin. And it immediately mints that NFT to your wallet. So kind of like a swap, you get an instant NFT and you don't have to worry about the sale going wrong or it shows up in the box wrong. Immediate minting, immediate ownership, and then over time, secondary marketplaces develop. So you have smart contracts that will also manage the sale of NFTs. I can put it up for auction and say, hey, I think my CryptoPunk has gone up in value over the years. Let's see what people are willing to pay for it. Yeah. And I can even get a sense of my value for that NFT. And of course, share it online and other things like that. So NFT marketplaces are much more open than you might have for sports memorabilia. You can still do eBay and things like that, but you won't get the kind of immediate gratification of selling it and exchanging it as soon as you get the amount you paid for it. So
and the price discovery might be a little bit quicker and more efficient on NFTs.
Exactly. Yeah, and a big part, like for example with eBay, like I have to trust that PayPal won't reverse the transaction. I have to trust that eBay lists it appropriately and doesn't take it down. And sometimes someone will just dispute it or send me the wrong copy of something, whereas I can verify the authenticity of an NFT by just looking on the blockchain or using some program that verifies it on the blockchain. Whereas with in memorabilia or any collectible industry, there's typically a big part of it that is focused entirely on just verifying legitimacy. Was this really signed by Dak Prescott? Was this really minted by the official MLB players, or was it like a knockoff that someone's trying to pass off as the real thing? That's not as much of a problem in the NFT world.
Yeah, well, that's huge because fraud and everybody would hate to be the owner of a $1,000 Babe Ruth or Mickey Mantle signed baseball that turns out to be just a baseball someone bought for $3.99 and faked Babe Ruth's or Mickey Mantle's signature on it. Perhaps dating myself by using Babe Ruth and Mickey Mantle. I should have probably used somebody like a more modern player. But okay, let's transition a little bit from the memorabilia. Well, actually, before we do, one more question. Kings of Leon, didn't they did something on an NFT? So musicians are doing this as well. Like, how does it break the problem that Napster created with infinitely duplicating music online? How does an NFT help fix that?
So that's I think still an open question that I think a lot of artists that are starting to do these sort of NFT offerings are starting to play with. Now you can just start with, I just want to recognize that this person gave me money to help me create this work, and they get an NFT to just kind of use that as a status symbol. So that's a starting point, kind of like sponsoring them on Patreon or Indiegogo. But we are starting to see some ideas for how could you actually use that in the distribution of the music. And the biggest problem with let's say online piracy or even recording studios that are perfectly legal, but they definitely take a large cut for distribution, is the fact that it's very hard to police media online once it's released. If it's on the internet, people are going to copy it, they're going to share it. So how do you control that with an NFT? Well, most cases you don't, but what you can do is use that as a pointer to say you have a legal right to this piece of music, if that's what the artist wants the NFT to represent. Yeah. And we're currently in a world where there's not a lot of streaming services that support NFTs, but we are already seeing some look at NFTs as a way to say, instead of buying the rights to, let's say, Britney Spears, and hosting that on Spotify, we could say the individual goes out and buys an NFT for Britney Spears music, and then when they go to Spotify, they tell Spotify, hey, here's my NFT. I've already purchased this, whether you have the rights to it or not. I do have a right to it. Please stream it to me. And that's an area where, instead of depending on these very large platforms like Spotify and others to kind of provide royalties and typically take a large cut, you can actually give that back to the artist. Now, the onus is we have to have streaming providers support it. And I think that's going to be probably a long ways coming, but it's definitely something that people are looking at. And maybe even the streaming provider itself can become more decentralized over time with different technologies.
Yeah, I did hear about a decentralized streaming provider recently that's just gone from like a few thousand users to like hundreds of thousands of users over the course of just a few months, although the name would escape me like right now at this moment when I'm trying to think of it. But okay, now let's transition over to real estate. How, and this is more of a tokenization conversation, which I guess is broader than NFTs. Describe for the audience what tokenization is and why that's important, and how that could actually drastically change the real estate market.
So tokenization is a pretty broad term, and typically it applies to the idea of taking something and representing it as a token. So it could be a fungible token, a non-fungible token. Typically in the case of real estate, we would be talking non-fungible as well. So a typical NFT.
Say that cup represents an apartment complex. You might have 100 tokens that represent ownership to that cup/apartment complex.
So now we're taking an NFT, which is kind of your baseline piece, and then we're going to say, well, if someone wants one of 100 equal parts of this, we can create a token on top that then splits it up. So let's say I want to create an apartment complex and I want to get funding for it. Rather than maybe going through a more typical arrangement through a bank, I might say, let me go online and say, hey, if you fund this, you'll get at least one token per whatever amount you want, and then you'll get a share of the profits of this real estate venture. And so that's one example of how you can tokenize with several different forms of token.
And when they do that, let's be sure, and again, folks will need to consult an attorney. This is not financial advice, but you need to, unless you're going to do like a regulated securities offering, you would need to offer that only to an accredited investor. Is that right?
Yeah, and in these scenarios, I think one thing that NFTs and tokenization don't really account for is the law and how the law is recognized. And that's one thing that I think we're going to be working with over time. But assuming that you can create an arrangement that is legal, this is a way to say, instead of a lot of that being done in real estate paperwork, which is notoriously burdensome in many transactions, we can actually create an online smart contract that handles a lot of that, and the ownership of this can just be very simply tokenized. And so if you can get a court or a legal system to recognize a token as kind of like a deed, effectively, it's kind of a corresponding title, then you can actually transfer it without having to go to a court to recognize that transfer or register it somewhere. You can actually trust that the blockchain will handle that for you, and if there's a legal dispute, the blockchain will help resolve it.
And let's think through, for those that are listening that might be real estate developers or brokers or agents, there's traditionally in the real estate space something that's called the illiquidity discount, where real estate is not selling at its true market potential, because in order to sell a big building, you either sell it or you don't. And you've got to, when you sell it, you pay out all the investors, especially if it's a privately held, private equity, exit. You pay out all the investors a percentage, all the limited partners and the general partner a percentage of their, based on the cap table, the capitalization table. Now, how does an NFT potentially eliminate that illiquidity discount? How does it bring, not even an NFT, but just tokenization, how does it bring more liquidity to the space?
So the potential there is the idea that if we can tokenize something and split it up into more pieces, no one wants to buy a 50 million or let's say a $2 million apartment complex. No one has the money for that necessarily in this marketplace, or if they do, it's going to be inefficient, or they'll bid them down to $1.5 million. Who knows? But if you're in a marketplace where there's a lot of buyers that are willing to buy in small amounts, you can break it up into batches that are more appealing to them. In fact, not only could you do it for that apartment complex, you could do it for another 20 and even potentially mix and match. So let's say you don't want to take the risk this one apartment complex burns down, but if you mix in a contribution from that and then another 20, you've actually spread out your risk. Kind of like a mortgage-backed security, except instead of relying on a very nebulous network of mortgages and banks, it's actually all on a blockchain and fairly transparent. There's still risk involved, but we have a lot more clarity around what we're getting into, and these are things that we might not otherwise have been able to split up efficiently before.
Yeah, because when you have a limited partner that wants to move out, you've got fees, you've got, when I say move out, I mean like have a liquidity event and leave the private equity cap table. Then you've got restructuring fees and legal fees and all that kind of stuff, and then somebody's got to make up that liquidity, right? Someone's got to buy that person out.
Yep.
Whether it's a first right of refusal for a current limited partner that's already on the cap table, or you find somebody else to come in and make that investment. This kind of does away with all that. There's a marketplace out there that is functioning. Now, I've heard of some people that don't make it tradable 24 hours a day, 7 days a week, like crypto. Like you might have a tokenized commercial real estate marketplace say that, okay, every week there's going to be a token. The tokens will, the ones that will be going up for sale are up for sale, and you can purchase it, and there's like a period where you can do that. That way you're not having like, you're kind of building that, building that price discovery so that it all happens in a certain amount of time, so you get better price discovery than if you had 24/7 tokens trading. If there's only 100 tokens that represents this building that we're in right now, you might not get somebody wanting to buy those every second of every day. It might not be for once a month that an investor comes in and says, hey, I want to buy one of those tokens that represents 1% ownership in this building.
Yeah.
So talk about what that might do for privately held assets like multifamily, commercial, even residential, if they're, you may have a holding company that holds several rent houses or something. How does that allow them to price their assets, get more liquidity, bring in more to investors? What might that look like?
Gotcha. So I think it's definitely an open world where we're not entirely sure how it plays out, but I think the most obvious impact it will have is simply the fact that we can create more complex arrangement with more parties involved without needing to establish a personal level of trust. So usually when I buy real estate, I'm going to look at the house, I'm going to assess whether it's correct, I'm going to bring in someone else that can verify it, like a kind of an, I don't know what you call them, house auditors. But maybe
like a home inspector.
Yeah, home inspector. And in this case, maybe there's a way to take whatever that home inspector said about each property and include that in the NFT or in the token, and even go further. So all the checks that need to be done to ensure this is a home that actually does have rent, that does have occupancy, that does have a lot of things that are typically part of the research process a real estate investor might go through, can be more automated, or at the very least more accessible to other buyers out there. So they can say, let's say I'm going onto my real estate marketplace, I could even filter like Zillow and say it has to have this level of rent, it has to be in these sorts of neighborhoods. There's a lot of interesting details you could figure out that normally you only get through like a Zillow or otherwise, and even then,
or your agent or broker.
And typically that still requires a lot of friction to actually buy the asset, whereas here you could collect the information and the asset itself in the same place.
Yeah, with lower transaction fees.
Yes.
I think that's key because real estate is notorious for high transaction fees.
Yes, I think we could see a lot of efficiency here.
Yeah, the Western world, the United States, leads the pack for percentage of transactions on real estate that are taken out, they're eaten up by transaction fees. So, a lot of industries are built around simply charging rents on the buying and selling of the oldest asset in the world, real estate.
Yep.
Okay, well, tell us where you think this is all going. Like, in the next 10 years, where do you see the NFT tokenization? Is it expanding into new areas, or is it just building on the momentum that the space is experiencing right now? Where is it going? I
think it's definitely moving in a really interesting direction for what we consider valuable and how we can represent that online rather just in person. We already feel there's obviously value in a Twitter account with 100,000 followers, but we rely on Twitter for that to be valuable. If Twitter went away or decided that Twitter account wasn't going to exist anymore, the value disappears. So there's a reliance on Twitter. But with NFTs, especially when you link them to something that someone does feel is valuable, whether it's a silly image or a piece of real estate, whatever, that essentially that level of trust can actually be done in a decentralized way. And I think one area that will give us a good idea of where this is going is the video game industry, because that's an industry that for a long time has grown in value, not just in sense of the companies themselves, but the assets in game. There's a really rare in-game item like a sword or a spaceship that a lot of players want. You typically see these markets developed, whether the game intended it or not, where people will pay real money for them. And I think what we're seeing now is a lot of video games moving into the NFT space. Axie Infinity is one, Atlas is another, where they're building video game economies that run on NFTs because they want to say, we, the video game developer, aren't going to decide who owns this or not, and we're going to remove the ability for us to control this because we want the value to be guaranteed, and for these marketplaces to kind of develop in an organic way. And in many ways, they reflect a real-world economy, but in a virtual setting.
And eventually, that real-world economy is going to be in the real world as well.
I think so. I think we're going to see a lot of things gamified, and VR is a good example of things where you almost have essentially reality being brought into a virtual setting. And if people do work there, if they play video games or more specifically, they do online work that they want to be represented in a tangible way, NFTs are a good way to do it. So I think the same way video games are kind of giving us a glimpse of what economies look like, I think the digital world will move there, and then maybe the physical world ends up catching up as a result because it's already been proven out.
It's fascinating. Michael, thanks for being here to talk about this today. I'm sure the listeners and the viewers will have many more questions. This is just the start of the video content that will be produced on this subject matter, so look out for more videos to come. Thanks.